sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be going over my usual updates pertaining to Bitcoin, the New York Stock Exchange, XYO, Phantom, JASMY, and also I'm going to be throwing in THETA as well. After that I'm then going to jump into the analysis of 7 other altcoins or tokens, which again is just going to be the second part of the series that I technically started some time ago. Just where I go over altcoins, and after I go over these, as I said, these latter 7 altcoins, I'm going to then go to the websites associated with them, the white papers, info papers, whatever I could find. I'm just going to talk about them a little bit and fill you in more on the information behind the coin outside of just what the charts are showing. But to go ahead and get it started here for an update on Bitcoin. Again, we see this chart which I went over in my previous video. I will have my previous video and other videos linked as cards at the beginning of this video if you're new to my content and you want to check out anything else that I have posted. But for the update on this chart, you can see this is the weekly chart. We make special note of this black trend line right here, which is basically just with respect to our $69,000 to $48,000 peaks. As you can see right in this area right here, we are, as I mentioned previously, pretty much testing it right now. The candle is a little bit above it. There's currently a day and 15 hours left in this candle. Again, you can see that we are pushing back up to this purple band, which, as you can tell, and as I've mentioned, each time once we hit our bear market bottoms, we start to push up to that, into it, and then hopefully what we will see here is we will continue to break above that. We will solidify breaking above this trend line, hopefully with the next candle. Best case scenario that we'd want to see here for Bitcoin, assuming the price doesn't go any lower than what it has, is jumping here to this hour chart right here. So we had our pump out of our, again, I'll show it here on this daily chart, of this massive, basically curved linear falling triangle or wedge, whatever you want to call it, ever since we hit the double top of 65 to 69,000. After our FTX crash, we recently just broke out of that, as you can see right here again on this daily chart. But jumping back here to this hour chart, you can see again breaking out above it. Had this spike up, we saw an upward tilted bull flag, broke out a little bit, and now we're kind of seeing very similar formation. Again, zooming in on this, you can see time elapsed since we've hit our top right here. So far has been 157 bars. You can see this previous one was 155 bars. So I would expect some sort of decision, drastic decision, to be made more so than this boring sideways trading we've been getting. Either we will, as I did mention in my previous video, perhaps we'll get a significant retracement back down to this ascending channel, basically right here, these 2 turquoise trend lines, down to no lower than approximately 21,000, 20.8 thousand. If we start to break below 20.8 thousand, which again would just be completely obliterating this back here, this sideways action, I don't think that'll be good, and I think we will initiate the bear trap that I mentioned in the previous video, going all the way back to the 2015 bear market when we broke above this trend line, came back down and tested it basically as a massive bear trap. As again, you can see these black trend lines are particular for each bear market. So again, like I said, if we break above this a little bit more or whatever, but let's say we're going to get that bear trap, we will likely drop back down to the bottom range we set, no lower than around 15.5 to 15.7 thousand at this point. I don't think the price will go below that. I mean, we could also, worst case scenario, assuming we don't see that bear trap, come down and test this 800 EMA right here, this darker blue moving average or purple, however you see it. But that would be about worst bullish case scenario, again assuming we don't see that massive bear trap. I personally think that it's about 50-50 at this point, whether or not we'll see a breakdown into this channel right here. I would say that I probably do a little bit more slightly lean to maybe kind of just seeing maybe a smaller dump, maybe around to this 200 EMA right here, kind of just in general, this range, before we actually see some more movement towards the upside. Again, if we go to this daily chart, as I did mention, we are pretty much essentially right here in this area, seeing this downside right here. So as I did mention in the previous video, that could take us down to around, like I said, 21,000 approximately, maybe seeing some wicks down around 20.8 thousand. If we do see kind of a retracement, also lining up with this previous minor consolidation that we got back here in this area as well. If we do continue, whether or not we see that, but in general, if we don't see that bear trap continue upwards, we'll kind of just slowly move upwards until we meet this 800 estimating moving average right here around 28,000. Once we hit 25,000 and confirm breaking above that, we'll then jump towards, if I had to guess, anywhere from around 30 to 35,000 approximately, sit there for a little bit, and then again continue moving higher from there. We take a look at this 2 weekly chart right here. Again, similar idea to the weekly chart that I've been going over, but again, we have our same trend line right here. This time it's purple. We have this descending bear channel, basically, of this bear market bottom we've been setting right in this area for the last like 7 to 8 months, getting, as I've been mentioning, bullish divergence on all, stock RSI and the RSI, also getting this very major MACD flip recently that has been going on recently. You see it every single bear market bottom since 2012 for Bitcoin. We got also the bullish divergence vector candle is that as well. So, and we need to break above, according to this descending channel, around 20.8 thousand. Again, hopefully we will see this break above rather soon for Bitcoin, and we'll actually, next area we'll push will probably be towards 25, 26, maybe we'll see some wicks above where we got rejected at approximately 25,000 last time, which again will take us out of this, well, roughly out of this. I don't think the next candle is going to close. Again, like I said, there's only a day and 15 hours left in this current 2 weekly candle as well. But right now, the first thing we need to see is the price starting to move above this, I forget which one it is, but it's just this red moving average right here. We need to reclaim that, and then again, like I said, we'll move into this band. Eventually need to reclaim that as well until we begin the bull market, according to how I see the market. But that was about all that I really wanted to go over for Bitcoin. Here for the New York Stock Exchange, we are continuing to print bearish divergences, as you can see. If I zoom in right here on this 2-day chart, you can see even all the way from back here, the price slope is essentially positive. We're having a smaller positive slope right here as well, whereas the the RSI is still continually printing bearish divergences. We haven't really solidified this bearish divergence right here yet. For all we know, the RSI could continue to spike up here, especially if the price is going to go way higher from this, break above, and then hit this red range, like I said. But I personally believe that we will get this bearish divergence printed here, and the New York Stock Exchange, the stock exchange in general, will continue to go towards the downside, heading towards, in general, around 12.5 thousand, around 10.5 thousand. If we do indeed get rejected from here, again, we might move into this red range as perhaps like a bull trap, and then head back down. Or maybe I'm wrong about the decoupling, which is a part of this analysis in respect to the stock market and Bitcoin and cryptocurrency in general. Perhaps we'll head for the stock market into this red range and continue higher, assuming the decoupling isn't happening as early as I've been mentioning in my recent videos. Here's an update for this symmetrical triangle pattern for XYO. Still not looking bad, as long as Bitcoin doesn't see a major drop, and also the bear trap that I mentioned doesn't happen. I don't think we'll see XYO significantly fall out of this band right here, so this purple one, and just more especially this yellow range right here. If we do, I don't think we'd go any lower than our current bottom, although again, at the end of the day, I could be wrong, who knows. But so far, I think it, obviously, as I mentioned in my videos, you don't want to see price going sideways for too long. A lot of times it could signal lack of strength, but also at the same time, it doesn't necessarily have to mean that at the same time. I do think it is good that we essentially broke out from here. Came down and retested right here with this candle. We've just been going sideways. As long as, like I said, Bitcoin continues to go higher, I do believe XYO will eventually pump back up here towards this 800 EMA into this yellow box right here from around half a penny to 2.5 penny again. To go over that, it is what lines up with this previous major consolidation, which is where we'll likely get caught up with again once the price starts to move higher from this point. Here on the Bitcoin chart, as I mentioned, or the XYO to the Bitcoin chart, essentially seeing a similar pattern here. This time over it's a falling triangle, falling wedge. We, as you can see, broke about out of it, came back down and retested the resistance. So they've just kind of been trickling essentially sideways with a minor downwards negative slope. Again, pretty much the same idea here. If we take a look at the, we're getting a minor, not necessarily minor, I mean I guess you could consider it about borderline exaggerated, but just in general bullish divergence with respect to the RSI. The stock RSI is also essentially there as well, seeing more so negative slope on the price, positive slope right here on the stock RSI. Also pretty much the same thing. Yeah, same thing. We're seeing the same thing for the MACD as well right here. Pretty much the entire time from B all the way to our current price. It's been negative slope for the support, and the support right here for the MACD is going to be positive. And we are Bollinger Bands are tightening up, we're converging upon zero, so a decision is going to be made soon. Again, that just in general goes back to this right here for Bitcoin, whether or not it's going to take a dump towards the downside, perhaps enter that bear trap, or we will continue to go up from here. Only time is going to tell. I do think it's likely to happen maybe before this month ends, or maybe about a week or two into next month. The decision will be made. But here for an update on Phantom. Again, we are just continuing to nicely follow this fractal pattern, which again is just what goes back to what I have on here for Bitcoin. Again, I'll have the previous videos and other videos linked as cards. I touch on my whole ideas of my macro projections for Bitcoin and my phase cycle theory for it, if you want to have a breakdown of that, if you're not necessarily getting the picture of what I'm saying here. But I'm assuming, not assuming, well, I suppose I am assuming, but I believe with a high degree of certainty that we're going to see movements of price across the entire crypto market similar to how we saw after the March crash, which is what this fractal pattern is. And let's just go and zoom out here. It's just what lines up, as I said, from this March crash bottom all the way up to here. I believe we'll see something similar, as I said. Price targets for Phantom, depending upon how the market structure ends up going about. If we see the double top, first place is around $50 to about $90, and the second place is like $400 to $420. First price target I just mentioned, more towards the end of this year. The second price target would be into next year, or 2024. But so far, you can see we're just kind of been generally following this fractal pattern, moving up in a slanted, diagonal bullish manner. I believe we'll likely kind of just fizzle out here slowly towards the upside. Again, similar to what I was talking about for Bitcoin earlier, moving up towards 800 EMA. Once we confirm support more towards these higher values at this 800 EMA, we'll continue to break out here, head into this fan-like area, which is correlative to these double tops that we set back here, and then continue to those higher price targets. We are getting a bearish divergence. Again, but it doesn't mean we're going to see a major drop in price, although we could, but more so that we'll probably just kind of see a slow trickle towards the upside for price, I would assume, given the context of the entire market right now. Also, a lot of times when you see bearish divergences and then you see a hidden bullish divergence, so that is what typically will happen when you start seeing the bearish divergences. You can see multiple, triple, quadruple, etc. bearish divergences, but then if you see a hidden bullish divergence printed also along that, it is kind of like the reason why it's called a hidden bullish divergence, because it's a part of a bearish divergence, if you see what I'm saying there. But I mean, again, similar to Bitcoin, if we do see some sort of a retracement, we could come back down for Phantom around 34 cents, 30 to 35 cents or so for Phantom. Here's an update for JASMY. Again, kind of a similar picture here. As I mentioned, I don't really have too much of an idea of where JASMY could go. in my previous video I did mention up towards at highest around $44, which is a 2,000,000% move. That's just according to it not being any more worth the market value of Bitcoin. And Bitcoin tops out in the range that I've given towards the end of this year, leading into 6, 7, 8 months into next year. If the double top in terms of my market context and my cycle phases, etc., turns out how I see it turning out. So I mean, this could be one of the best movers. Who knows what's going to happen with it? But if it does hit this pink range up here around $44, it's only going to be worth 2.3 trillion, which is, assuming it tops out with Bitcoin at the same period of time, only going to be worth half of Bitcoin in terms of market value. So that's really all that matters. As long as a coin isn't worth more than Bitcoin at some point in time, then I don't think there's any reasonable, justifiable, logical reason to be like, well, that's just a stupid idea and whatnot. But again, we're going to be seeing a similar picture here for JASMY. If we continue, we see the market break down. Maybe we'll get entangled right here around this 200 EMA, maybe in this band a little bit lower, around 0.0044 to pretty much 0.005, so around approximately half a penny. But you can see how it's kind of just trading similar to what I went over Phantom. You've seen a slow trickle towards the upside, pretty much seeing the same thing. If we go back to Bitcoin on the daily, I mean, that's essentially what we're seeing here as well. If I move XYO more towards the daily, it's essentially, obviously it definitely looks different here. XYO, as I've mentioned in the past, moves, out of all the altcoins I've looked at, obviously altcoins clearly follow Bitcoin. But XYO moves the most different and uncorrelative to Bitcoin that I've seen. It still follows it, but it's most uncorrelated out of most of the coins that I've seen. But here for THETA, again, it's almost like we're looking at the same charts almost each time. Again, we're seeing the same movement upwards. We're following nice with this fractal pattern so far. Again, we could get that retracement towards the downside at around at 99 cents or so. Assuming the bear trap and whatnot that I mentioned does not happen. Again, I believe this coin will move, according to my market theory for cryptocurrency, around 45,000% towards around $300 to $340 approximately around beginning, according to this price pattern and context, beginning of next year or so. This one, as you can see, so obviously when Bitcoin made 64,000 its high and then topped out at 69,000 around November of 2021, solidifying that double top, you can see right here that XYO, or not, my bad, not XYO, THETA didn't continue to go higher and make a higher high. So we will likely not see that XYO, or not, again, sorry, my bad, THETA make a rejection down here and continue to go higher, likely top out more towards the beginning of next year. Whereas, as I mentioned here for Bitcoin, we would hit this first target, whether it's, I think approximately around 250,000 is where this first target will be, give or take like 30,000. 220,000 is the lowest for the first high, and then we'll see correction similar to how we saw back here during the previous bull market, and then we'll start to move upwards towards 270 to 300,000, assuming this first top's around 220 to 250,000. But that was about all that I wanted to go over here for the general updates that I've been going over recently. So now I'm just going to jump into the analysis of the coins I'm going to go over in this video with regards to what I mentioned at the beginning of the video. So the first one is going to be Chainlink. It's an Oracle project. Again, we'll see here, this is going to be the weekly chart. I think this one's going to move around 4,000% or so. That is a 400, I believe it's a 400x. Actually, give me 1 second. I don't think I'm wrong, but I might be wrong. 4,000, okay, 40x, that's what I was thinking. Okay, so this one's going to be more of a 40x in terms of its price movement. So this one's not really a massive mover, according to, or in respect to a lot of other coins. Like for example, like when I went over Phantom and THETA and XYO, those are, Phantom's like 200,000%, as I said, THETA's like 45,000%, XYO's like 32,000%. Those are some of the best movers that I've seen so far. This is one definitely on the lower side. But I likely think it'll move up towards around 220 approximately. We'll just say $200 to $240 or so. As you can see, we've hit this major trend line for support, or just trend line range essentially right here. This top lines up with around the 1.382 with respect to the Fibonacci retracement from the March crash to the highest high. This coin is set, forms a nice ABCD pattern, which is just inherent to, again, going back to Bitcoin back here. We'll see the same thing, this ABCD pattern, which is just what lines up with the current phase 1 that we're in of cycle 3, being the super phase, commonly known as the super cycle, looking kind of like a lightning bolt pattern, which is kind of fitting for the way that the market behaves during this phase, which is rapidly bullish, more so than, for example, like the 2015 bear market, which then led into the high of 2017 for Bitcoin. We've been getting a bullish divergence again somewhere to Bitcoin, as you can see down here. Negative price for support, positive slope for support down here on the RSI. Same thing for the stock RSI as well, getting that bullish divergence for about 7 months or so. Again, all these MACDs have been pretty much tornadoing, spiraling around zero ever since pretty much the first relative local low was set for the bear market on all these coins. I've been seeing a bullish divergence with respect to pretty much all the MACDs I've gone over for all of these coins so far, for at this point reaching almost 2 years. So I mean, obviously you can see the Bollinger Bands are tightening up for the last around like 9-10 months or so. We've been going pretty much sideways on this MACD. So eventually the pressure is going to have to be released. Again, in context with Bitcoin, everything's looking rather good right now. I think this one will top out according to more sometime around March of 2024, because this one didn't see, as you can see right here, it said its highest high in April, May of 2021, and didn't continue to go higher, and during November right here, like Bitcoin chose to do. So this one won't see the same type of double top that Bitcoin would see, according to the way it moved. But for example, like the coin that I mentioned, XYO, I believe it's going to top out, which is also another Oracle network, a real world Oracle network. I believe it's going to top out earlier than most of the market, around 6 to 7 months into this year, which, as you can see, that lines up with Chainlink being at this point right here, which you could hop out of XYO or any other given coin that's going to top out early and still catch another 500% in this coin. But like I said, this coin isn't really moving as much, it seems, in comparison to the other coins. So it's not necessarily the best project to be in, but obviously you can still make money on it, and people will make money on it. And I do believe it is a good project, all things considered. But here for SHX Stronghold, not too much price data at all for here. It's just been basically a falling wedge, basically, with how I have it drawn on here. Seen a nice breakout within the last like 10-12 days or so. So far it's moved to under 24%, completely obliterated this resistance right here, which is a fantastic thing to be seeing. Also, this Fibonacci fan that I have on here is also looking nice with the way price is moving up through it. Right now I just need to but continue to see price move upwards. Again, this is all going to depend on Bitcoin. We've seen a bullish divergence pretty much on the RSI essentially ever since the the bear market began. Price has been going down. You can see that the general slope, average slope over time for this stock RSI was positive instead of being negative like the price was. Essentially seeing the same thing here for the stock RSI as well. And then also, again, like I said, same thing here for the MACD. Set it slow relatively after. You can see right here, once the bear market began, ever since then it moved up and has been pretty much going sideways along zero until this built up pressure, this momentum throughout this bear market will be released. Last time I went over this coin, I drew up 27,000%, which is around a 277x, which is better than most of the coins. Again, like I said, anything over like 10,000 is really good, which is 100x or plus. And then once you start to get past like 30 to 50,000%, that's like super good. And like I said, Bantam is the highest I've seen so far at around like 200,000% or a 2000x. As I mentioned, JASMY could completely go berserk. So we'll have to find out for that one. I mean, even in the last bull market, SHIB went like over 1,000,000%, but SHIB was insanely cheap, which is also was a factor into it being able to move so many percentage points, which I don't believe it's going to be able to do that anymore because it's far more expensive than it used to be, even though it's still very cheap. But right now, let's see, moving up towards, so we've hit this general range. Let me find my box down here. So we've hit this range right here pretty much for price, so we could continue a little bit higher, sit here for a little bit, and then continue to move up more towards around like this area right here for price, sit there for a little bit, and then finally we want to see a break above around shy of 2 pennies, around 1.5 penny, then hopefully continue higher towards there. The price target that I have for this right now is 14 cents. I don't remember why I specifically drew this on here, but I think I may have done it with respect to the circulating supply or something. I'm not going to try to figure out right now, but that was pretty much all for this coin. Again, stronghold SHX. Here for Digibyte, this one, first price target, I believe this one will top out around beginning of next year according to this so far. Ever since I last went over it, it's been behaving very nicely along with this fractal pattern that I've had on here since about end of last year or so. Again, this factors in with how Phantom and all the other coins I've gone over previously are moving along nicely with their fractal patterns according to my market context as well. I think the first top more towards the end of this year will be around, let's see here, around 44 cents or so. That's around 4,700%. In total, I think this thing can move towards around $1 at around 11.5 thousand%, which is around 115x. Again, this is one of the better performers, but on the lower side of the better performers. This coin has a very interesting whole, like, just premise sentiment behind it, but it does kind of, the way the price chart looks, it reminds me of things like XMR Monero or like XRP. They seem to kind of be losing steam over time, which is not a good thing to be seeing. But we'll obviously have to see how that plays out at the end of the day. So we can see on here, we've been getting a bullish divergence again, just similar to pretty much everything else I've been going on the RSI right here. Positive slope, price, negative slope. You can see right here, these pink vector candles printed at this bottom right here. Seeing the same thing right here as well. A lot of times these are going to be lining up with the bullish divergence, as you can see. Pink vector candles, negative price, slope. For support, RSI, stock RSI have a positive support in terms of slope. Again, hinting, or not hinting, but saying a bullish divergence. We've also come down to test this 0.618 golden ratio, and that this retracement's taken from the absolute bottom to the absolute high that this coin is set. So that's also nice to see as well. Here for Chili's, this one's pretty, it's got an, I guess, a rather elegant price formation over time. It looks very simple. I mean, you can see, and I'll point it out right here. So you can see basically this M we set right here, then we make another M, so a double M, then we reach our high. We'll also see pretty much the same thing right here. So from this local low, this relative local low, we'll see this M right here, and we'll see another one right here. So we see 2M. Oh wait, no, that's not how I actually wanted to draw that out. I forgot about the way that I have this fractal pattern right here. So what I was actually trying to draw out was, so your first M right here leading in to this bottom right here, then we'll see price continue to form like this. We'll see the double M, then we'll lead into the top again. It's what we saw after the March, roughly, well actually from, according to Chili's, September of 19. We're actually seeing, I would say, pretty much the exact same, not exact same, obviously it's self-similar as I mentioned in my videos, but this self-similar price movement, again, like you said, you see these double M's, so you move towards the upside, which again is what I was going over with this Bitcoin chart. As you can see, origin drop, double M's to the bottom, 9-wave bull market begins. Again, you see it right here, origin drop, double M's, 9-wave bull market essentially began. And we'll see the same thing back here as well. I think the price target for this one will end up more towards the end of this year, maybe bleed in a little bit to January, February of 2024 at around $20. I was actually watching this coin during the last bull market, and as I was going into work, I saw it forming a very nice looking symmetrical triangle, and I told myself to buy into it, but I was like, you know what, you're going into work, just don't do it right now. I then went into work and proceeded to watch this coin move over like 100% in the first hour I was at work, and I was like, wow, good one, Elijah. The decision you totally should have made. It's always unfortunate when things like that happen, but we're not seeing really any major bullish divergence for this coin. We are seeing our pink vector candles start to print right here as well. You see them print towards this absolute bottom, continue to move up from there. We saw one right here. We also got them at our two bottoms right here, I believe, which will act as the double bottom for this coin as well. This one's around a 25,000% move once again. Around 250x or so here for KDA. I don't really know where this one's going to go. It doesn't have much price data, so I can't interpret it how I have with the other ones after roughly the March crash. But I did entertain it previously when I went over it up to a approximately $1.618 trillion market value, which would touch around 8.4 thousand. Also moving towards the pretty much the 0.5 to 0.5, 0.618, 0.786 range, which are these lighter greenish blue ranges up here. My cursor is just as a general range where I think we could possibly hit. Again, like I said, if it times up properly with Bitcoin, it doesn't really matter if it has this high of a market value as long as it's less than Bitcoin. Although only some of these coins, like obviously whenever the next bull market finally begins and is really confirmed, I wouldn't say it's completely confirmed yet, but it's looking very nice for the crypto market right now. But as soon as it's confirmed and things actually do lead into the parabolic movements and whatnot towards these highs, assuming I'm right what I've been talking about in this video, but only a handful of coins are going to have super high market values, because those are just obviously going to be the more viable ones, the ones people have put more value into. So I mean, not obviously all these coins are going to go as high as I said, but I mean, I have other ranges. So if it moves around 21,000%, 218x, that is towards around $242. If it moves 100,000%, it's 1,000x. It would move to around 1.1 thousand. This is a very interesting blockchain, which again, I'm going to be going over these project-wise here in just a few moments when I finish up these analyses. But we got our pink vector candle printed right here at our bottom. We've been getting this, going to get a bullish divergence on this chart on the stock RSI. We did get one on this, well, my bad, the RSI. We don't have one on the stock RSI. You can see that we do essentially have one with this lift off right here compared to seeing the negative slope right here. Again, same ideas for the MACD. Set its lowest low shortly after the bear market began. Ever since then, price has been going down. MACD has been converging towards zero. Bollinger Bands are tightening up. Eventually, the momentum will have to be released towards the upside to carry out the next bull market. Here for TRIAS, again, this is one of the coins that doesn't have enough price data for me to interpret it. According to how I see the market, we are getting on the RSI bullish divergence with respect to these two areas of pink vector candles. Stock RSI, didn't see that, but got a nice triple bottom right here. We also formed this M right here as well, which is a good thing to see. A lot of times you'll see W's and M's are very, very important aspects of trading in general in terms of market structure of its price. A lot of times you'll see W's form in terms of harmonic price movements. You'll see W's form with M's as the double bottom, and then it'll go towards some sort of high. And then also a lot of times you'll see an M form with a W like that, and it'll set like a double top or something, for example. But so far we have seen this coin. This one is started moving up since October of last year, which Bitcoin was going down while this coin was going up. So this coin is technically performing a little bit better, I suppose you could say, than the most of the market. So far from its bottoms, it again around October last year, it's already up 205%. Again, we're kind of seeing this similar, just upwards tilted wavering of price trading in a bullish way. I believe that we'll continue to break upwards here. We need to break above this band again, this blue moving average you see above there. I've entertained this all the way up towards, again, this on this Fibonacci fan, towards this 0.5, 0.78, 0.618, 0.786 range, highest at around $1,642, which lines up with seeing a 200,000% move. For a lot of these coins, I just entertained them up at highest to 200,000% because that's the highest I've seen so far, which again, like I said, was Phantom, but these are the other general price targets I have right here of 85, 200, 404, 795, so on. Also just lining up with these various Fibonacci retracements that you see on here as well. Here for the last coin, ANKR. This is also one of the better movers I've seen. This is a 35,000% move, which is a 350x. We saw our pink vector candles right here printed. We are seeing a borderline exaggerated bullish divergence for this coin with respect to the approximately 7-month bullish divergence in general that I've been speaking about with Bitcoin and whatnot. Are seeing another one right here for the stock RSI, finding lift off towards the upside. Again, same picture here as painted for the MACD. Lowest low was set shortly after the bear market began and has been moving upwards ever since, converging, building up that momentum for it to release that pressure, that buying pressure towards the upside so far. We've moved up nicely, obviously. It'll be nice to see price candles start to close above this 618 with strength. Obviously, again, breaking through this band is on all of these charts I've been going over, and the moving average associated with that band. This one will likely see a quick thrust towards the upside, I believe, again, and then we'll come down sometime around June, July, August, September of this year, according to that. Top out more towards the end of this year, January, February, maybe of next year at around $8, $8 to $9, lining up with the 1.618. Again, the Fibonacci retracement is taken from lowest low in here to the highest high we've set. Again, this will be something like, for example, like I said, I think XYO is going to top out while this coin's basically forming a symmetrical triangle in form of a bull flag to finish out the rest of its bull market, wherein you can take profits from XYO or some other coin that tops out earlier on and then catch in this coin another 6,000 to 7,000% move, which is similar to Ethereum, and actually brings me back to what I was going over earlier for Theta. So if we actually go, like I said, around June, July or so, which lines up around right here for Theta, is Theta's still going to have about, maybe it wasn't Theta. That's not what I remember. Maybe I did it from down here. I don't know what I was going to go over. There was some coin that I was looking at the other day that still had like 10,000% to move when like I've been mentioning, you could hop out of XYO and whatnot, but I quite literally don't remember which one that is. May have been ANKR now that I think about it. Let's see. I don't know if I went down from the, I don't know. Anyways, that was about all that I wanted to go over for the technical analysis aspect of this video. I'm now going to jump into the overviews of the coins, their websites, info papers, white papers, etc. So again, in order of how I went over the analysis just recently, I'm going to go over the information in the same order. So first off, we have Chainlink. As I've already mentioned, it is a Oracle project, as you can see on here highlighted. Decentralized Oracle networks for any smart contract. Chainlink enables smart contracts on any blockchain to leverage extensive off-chain resources such as tamper-proof price data, verifiable randomness, automation functions, external application programming interfaces, and much more. Again, in general, Oracle networks, like I've talked about XYO in the past, I feel like XYO is a good way to correlate the idea of an Oracle network. It's basically the blockchain, a blockchain solution that is attempting to and is integrating real-world data in terms of like weather, like the pressure index or whatnot of outside, like UV, like I mean, like I said, anything relating to the real world. Like I said, XYO is partnered with like FedEx and Microsoft, so think about them being partnered with delivery services, connecting with real world data and whatnot. It would be allowed to track packages fully and securely to where things wouldn't be lost like at all anymore, or definitely not as much as they are currently. But if we go down again on the website, like here, smart contracts are inherently disconnected. Blockchains are highly secure and reliable networks for value exchange, but lack the functionality to natively fetch external data or send data to off-chain systems in a manner that retains end-to-end tamper resistance. Chainlink connects smart contracts to the real world, again, following through with Oracle functionality. Through the use of secure oracles, Chainlink extends the functionality of blockchains by connecting smart contracts to real-world data, events, payments, and off-chain computation in a highly tamper-resistant and reliable manner. And Chainlink is meant to pretty much connect with just about any blockchain. It's a multi-chain. I believe it on here it says somewhere about it being blockchain agnostic, which just means it can connect anything. You can see it has Solana specifically right here, but as you can see, we have basically the Chainlink network, again being correlated by this graphic, basically is like just an attachment per se of any blockchain, which that blockchain will use Chainlink to gather information about real world data. As you can see these images on here, you can see a football, so like sports information, price data for charts and like the stock market or whatever. Like I said, weather, you have a weather, like a cloud right here. There's a windmill, or like I forget what the actual name of those, what they are outside of windmill, but wind turbines and things like that. Right here you can see like a governmental bank institution, something along that nature. You have an Ethereum logo right here. Again, like I said, it's just an Oracle network, which is, in general, these projects are just more bringing the adoption into the world and like literally changing, as I've been mentioning, the fabric of society and its peer-to-peer interaction, social cohesion, businesses, institutions, etc. And really just, like I said, changing the fabric of how we have interacted with the world, and even the internet, obviously with the Web3 and things like that, which is essentially the blockchain, decentralization, etc. of the internet and things like that, going into DeFi. But right here they claim to be the most reliable Oracle network in DeFi. We read right here, Chainlink price feeds provide critical financial market data required to issue, settle, and secure a wide array of DeFi applications. The Chainlink network supports a multitude of price and data feeds live in production, securing tens of billions in value for many leading DeFi applications, SeFi companies, and various other financial institutions. Down here you can see Aave. Some of these are talking about partners 1inch, DX, and other things. Let's see. Again, right here you see connect your smart contracts to real-world data and events. Smart contracts, in a simple way, are kind of just basically just think about them as smart contracts, like any normal contract that you would make with somebody in your day-to-day life. Like, for example, on paper, it's just a smart contract is basically a digital version of that. Smart contracts are basically kind of the foundational coding layer of decentralized application, so dApps. It's basically like the guidelines. I like to think about smart contracts as kind of like whenever you're playing a game and like you have the instruction booklet for like the rules, guidelines, and whatnot, how to make the game function properly, to play it correctly. So for a blockchain to function correctly and for people to essentially play it correctly by using it, and whatnot. Smart contracts are kind of basically the rules. Like, for example, to execute a smart contract, certain parameters have to be met in order for it to go through, and it could just be a simple, like retail transaction. Maybe you're just going to send somebody some money. Maybe you're sending somebody some like personal records, medical records, with respect to a blockchain. But right here, highlighted once more, Chainlink decentralized Oracle networks allow developers to connect their smart contracts to any off-chain data resource or computation. Again, this is kind of just getting through the idea. Smart contracts with respect to blockchain technology being connected to, like I said, off-chain data such as weather. I mean, literally just about anything you can think about. Whereas wherein these smart contracts will be executed and you'll get that information, blockchain, etc., is communicating and things along that nature. But to continue, Chainlink's ability to connect with any application programming interface and perform any off-chain computation opens up a wide variety of use cases, such as Arbol using Chainlink for weather data, as I've been mentioning, to create weather risk products, and THETA Network leveraging Chainlink for viewership data to fight ad fraud for online content. THETA Network is basically bringing decentralization on Web3 to, it's basically like YouTube, but through like blockchain solutions and Web3 and things like that, which is very interesting, and I think will be an interesting area of blockchain to see progress as time goes on. But if we look right here, easy blockchain adoption for enterprises. Chainlink provides enterprises and governments with numerous ways to leverage the benefits of blockchain technology without re-architecting their current systems. So you can kind of think about it, and obviously it doesn't say plug and play on here, and I'm not saying this is what it is, but a lot of blockchain protocols or solutions will mention that they're just plug and play, which means you can just easily, plug and play it, connect it to your business and how it's ran. Like, for example, like fast food restaurants using blockchain to have data stored. Same thing for like hospitals storing their patients' personal data, their medical records and whatnot, using blockchains. And through smart contracts, if you need to send that medical data to another doctor, another institution, or whatever, smart contracts would basically execute the sending of that information, essentially. But that was about all that I really wanted to touch on here for this first website on Chainlink. I'm going to go to the white paper now and just read one portion of it, which is talking about decentralized Oracle networks. So decentralized Oracle networks are designed to enhance and extend the capabilities of smart contracts on a target blockchain or main chain through functions that are not available natively. They do so by providing the three basic resources found in computing systems: networking, storage, and computation. A DON aims to offer these resources, which is DON is Decentralized Oracle Network, to offer these resources with strong confidentiality, integrity, and availability properties, as well as accountability. DONs are formed by committees of Oracle nodes that cooperate to fulfill a specific job or choose to establish a long-lived relationship in order to provide persistent services to clients. DONs are designed in a blockchain agnostic way. Again, that's what I mentioned earlier. They promise to serve as a powerful and flexible tool for application developers to create off-chain support for their smart contracts on any supported main chain, such as like Bitcoin, Ethereum, Cardano, etc. Two types of functionalities realize the capabilities of a DON: executables and adapters. Executables are programs that run continuously and in a decentralized manner on the DON. While they do not directly store main chain assets, they have important benefits, including high performance and the ability to perform confidential computation. Like, for example, I'm not directly correlating this to an Oracle network, but certain blockchain solutions, like in forms of like layer 2s and whatnot, can be built on top of the layer 1 project, which allows for computation that is used within the main chain to be like basically off-sourced to like background node processing, essentially, in a way to put it, to where it eases the intensity of the computation, for example, like on the main chain itself, so things can just run more fluidly, efficiently, and like also would help with scalability and things like that. But to continue here, executables run autonomously on a DON and perform deterministic operations. They work in hand with adapters that link the DON to external sources and may be called executables. Adapters, as we envisioned them from DONs, are a generalization of the external adapters in Chainlink today. While existing adapters typically only fetch data from data sources, adapters may operate bidirectionally. In DONs, they may additionally leverage joint computation by DON nodes to achieve additional features, such as encrypting reports for privacy-preserving consumption by an executable. And again, just in general, this factors into off-sourcing computation that is a part of the layer 1 main chain to Oracle networks, or just some other layer or aspect that you're connecting your main chain to just, again, like I said, make it more efficient, to maybe even provide more security, just whatever this layer is trying to add to like the layer 1 or the main chain in general. But to provide a sense of DON's basic operation, Figure 1, which is going to be below, shows conceptually how a DON might be used to send reports to a blockchain and thus achieve traditional existing Oracle functionality. DONs can provide many additional features, however, beyond Chainlink existing networks. For example, within the general structure of Figure 1, the executable could record fetched asset price data on the DON using such data to compute. Example, a trailing average for its data reports. So basically right here you see the executable, whereas adapters being as like web servers, you have the storage associated with the executable, again with an adapter function to the blockchain. Again, it's just showing basically the Oracle functionality and having this as some form of a layer, some sort of attachment basically to a main chain or a blockchain, with it all just communicating with each other. The Oracle network is fetching data from the real world. Again, like I said, weather, whatever it may be, sports data, stock market data, crypto market data in terms of price action, and it's connecting that with the blockchain. But to continue, Figure 1, conceptual figure showing as an example how a decentralized Oracle network can realize basic Oracle functionality, i.e. relay. Here we can see relay off-chain data to a smart contract or to a contract. An executable uses adapters to fetch off-chain data, which it computes on, sending output over another adapter to a target blockchain. Adapters are initiated by code in the DON, represented by small blue boxes. Again, what I just went over up here. Arrows show the direction of data flow for this particular example. So again, we'll see here web servers essentially acting as the that is going to basically have the information that you're trying to fetch. Essentially, the centralized Oracle network is doing all that. It's fetching that data, then sending it to the blockchain essentially. The executable can additionally read and write to local DON storage, so decentralized storage with respect to the decentralized Oracle networks, to keep state and or communicate with other executables. Flexible network computation, networking computation, and storage in DONs, all represented here, enable a host of novel applications. A major benefit of DONs is their ability to bootstrap new blockchain services. DONs are a vehicle by which existing Oracle networks can quickly stand up service applications that will today require the creation of purpose-built networks. We give a number of examples of such applications in Section 4. Section 3, which I'm not going to be reading on in this video. Again, I'm also going to have all of these websites and the white papers linked in the description below if you want to go to it. If you're interested in anything I'm talking about and you want to look at it more for yourself than what I'm going to go over. But that was all that I want to go over here for a chain link. Next one is Stronghold. Here on the home page we can see most tokens store value. They claim SHX creates it. Stronghold's expanding payments ecosystem uses the SHX token as a building block with real-world purpose. Scroll down here. It says it's a climate-friendly cryptocurrency. SHX is built on the Stellar network, one of the most energy-efficient blockchain networks using the Stellar consensus protocol, a low-energy consensus mechanism achieved through proof of agreement. SHX saves energy with each transaction. Let's see down here. All right, so we're going to go and go to the little info paper they have here. So let's go ahead and jump back here to, there's not too much good information here on this, but right here is an introduction into this. It says enabling simple and powerful payment tools to provide fast, secure, and accessible financial services for all is their mission, their vision to build a more inclusive, stable, and connected global economy. So basically this coin is trying to, like I said, it's everything obviously blockchain wise is just further trying to adopt the solutions that it provides into the real world so we can change the fundamentals of the financial system, the economic system, social cohesion in terms of peer-to-peer interaction by creating, a global economy. In terms of, obviously this is going to want to offer that to the financial systems, institutions, etc., things like that in order to, again, like I said, kind of create that cohesive network globally, which is where things are heading now. If you're aware of the World Economic Forum, the Great Reset, things like that, which are not good motives, good initiatives at all. So I suggest to be aware of it and at least definitely be informed on the things that I just mentioned. But the only other good page on here that I found was this one right here. So it says SHX's distributed networks. It is available on both the Stellar and Ethereum as an ERC20 token, obviously. As our mission is to provide fast, secure, and accessible financial services for all, we care deeply about interoperability between all payment networks. This enables SHX for cross-ledger value transfers to expand the SHX ecosystem for developer and our community. So they mentioned interoperability between all payment networks. Interoperability is an aspect of layer 3 solutions in terms of blockchain technology as a whole, which is basically just trying to, if you were to think about it as Bitcoin kind of being the center node in a network of every single layer 1 blockchain, imagine if Bitcoin has built on top of it a layer 3 or just an interoperability function, and at some point it develops some form of smart contracts or things like that, which John McAfee, who came up with McAfee antivirus and whatnot, obviously was a smart guy in his own right. I guess you could suppose he was a little kooky, but I enjoyed listening to him. He said that smart contracts could literally not be added on top of Bitcoin. I think that that's maybe a rather dubious claim. The Lightning Network is essentially a layer on top of Bitcoin as well, acting as a lightning fast payment network, which also does a little bit, obviously in terms of like scalability and things like that for Bitcoin. I wouldn't put it against it to the fact that we're smart contracts or some form of that could be added to Bitcoin. And I think it makes most logical sense that Bitcoin should be and will likely be, if I'm going to make a guess for the future, the main interoperability chain, assuming this happens, because it's the fundamental store of value. It was the first chain that came out. It's the most expensive one. I believe it will continue to be the most expensive and most valuable blockchain. And I think it only makes sense that Bitcoin would be this most center point in this massive interoperability blockchain, which is basically Bitcoin's the center point, and Ethereum, Cardano, every other coin as a layer 1 project that I've been talking about is basically just in like a flow around Bitcoin. Bitcoin kind of being that center point of gravity, kind of like our universe works with black holes at the center of galaxies and everything spirals around it. It is essentially the same thing. Again, as videos as I played in the past with like Jack Mallers and things like that. Obviously, the technology of blockchain in general is very heavily connected to physics as well. But to get on to the next coin here for Digibyte, it says here, more secure, faster, forward-thinking. Digibyte is more than a faster digital currency. It is an innovative blockchain that can be used for digital assets, smart contracts, decentralized applications, and secure authentication. This coin came out shortly after Bitcoin. Right here it says what makes Digibyte stronger than others. Digibyte is a rapidly growing open source blockchain created in late 2013 and released in early 2014. After 9 years of forward-thinking development, Digibyte has become one of the safest, fastest, longest, and most decentralized UTXO blockchain in existence. Bitcoin is a UTX blockchain. It means just, actually, I don't forgot what it means. I'll find it eventually. Maybe I won't. Give me some time here. Oh, it's slipping my mind. What does UTXO mean? It's probably here at the top. Okay, unspent transaction output. That's what it is. So if we actually scroll down here to the bottom, basically unspent transaction outputs, like, for example, it's basically the Bitcoin that you own because it's technically an unspent transaction output. And the way that I've gathered it is that whenever, as it says right here, kind of with this model, Alice has an unspent transaction output of 10 Bitcoin. It goes to the transaction, which I would say is through an intermediary process as it's going through the transaction, becomes a spent transaction in a way. And then once it's sent to Bob and Bob receives however much Bitcoin he was supposed to be given, it then becomes a new unspent transaction output. And then as you can see down here, Alice sent 10 Bitcoin, Bob was only supposed to get 6. Another unspent transaction output becomes in form of change for Alice is 4 Bitcoin. But I'm going to go ahead and read this here to give a definition of the UTXO. In the real world, the UTXOs are almost similar to physical cash/coins. When one tries to spend cash in a shop, he gives up the entire note, takes the goods, and takes back the remaining change. If one has a cash note of $10 and wants to buy good price $5, he doesn't divide the note in half for the payment. Rather, he gives up the full note and takes a new $5 note as a change along with the goods. UTXOs work in similar fashion. In a transaction, UTXOs are always consumed in full, even if the required payment is of partial the value of the original UTXO. For example, referring to the figure above, suppose Alice wants to pay Bob for some goods and services which cost 6 Bitcoin, but Alice has a single UTXO of 10 Bitcoin. She will create a transaction that will then consume up this whole UTXO of 10 Bitcoin and create 2 new UTXOs, one for Bob with 6 Bitcoin and one for herself with 4 Bitcoin value. The UTXO Alice pays to herself is known as the change UTXO, and her wallet software automatically tracks this UTXO to give her the final balance of 4 Bitcoin. Every time a payment is made for a smaller value than the available UTXOs, the wallet automatically creates the change UTXO for the user. Every UTXO is associated with a Bitcoin address, and there are many types of addresses: P2PKH, P2SH, Bec32, etc. Different addresses provide different functionality for these UTXOs. For example, if one creates a multi-signature UTXO, i.e. a UTXO that needs 2 keys from 2 or more people to be spent, is associated with an address that starts with a 3 and looks like this below. If you have a Bitcoin wallet, some balance, you can always try looking up for your individual UTXOs. What I found interesting, I'm not going to continue to read all of this, but basically, so UTXO model is with respect to Bitcoin, and then the account balance model is with respect to Ethereum. Actually, I'm just going to go ahead and read this, but it should feel a little bizarre to think about this obscured concept of UTXO in a digital payment system. UTXO feels inherently similar to physical cash, whereas in digital payment platforms we deal with accounts. The account model is simply where users have one or multiple accounts. The amounts can be anything, and there's no concept of change back. Credit is added to the balance, and debit is subtracted away. Even though these two models achieve similar goals, i.e. pay money to people, they both have some advantages and disadvantages. UTX models are better for scalability and privacy. The transaction logic is simplified as each UTXO can only be consumed once and as a whole. Because the logic is simpler, transaction verifications can be made parallel. Different schemes of privacy enhancing techniques can be developed using the UTXO model, like CoinJoin, etc. In exchange for these benefits, the trade-offs are in usability. The UTXO model is inherently unintuitive, thus most of the wallets had to abstract away UTXOs and simulate normal account-like UI for users. UTXOs are limited in terms of more exotic smart contracts that execute based on the user's total account balance. Because of these reasons, Ethereum rejected the UTXO model and they went for a simple and more flexible account balance model. But basically what I was going to get in is that I don't think Ethereum at the end of the day, I think it's, as a lot of people say, it's more centralized than blockchain technology is meant to be. And obviously I think the UTXO model is a better way to go when it comes to actually trying to achieve what blockchain is meant to achieve in terms of actually giving power back to the people and taking it away from the government in terms of finances and economics, in terms of decentralization, security, etc. And I find it rather, obviously, I don't think the UTXO model is inherently unintuitive either as well. I think it's, especially with this example that this gave up here, I think it's actually rather perhaps maybe intuitive, at least with how I interpret it. But to go back here to Digibyte, right here it says truly decentralized. Digibyte has never been funded through an ICO or significant amount of premiered coins. There is no CEO or company controlling the Digibyte blockchain. It is a volunteer-based and global community-driven project. More secure, Digibyte uses 5 cryptographic algorithms and real-time difficulty adjustment to prevent malicious mining, centralization, and hash power fluctuation, one of which is AutoScript that changes itself every 10 days for ASIC resistance. Much faster. Digibyte blocks occur every 15 seconds, which is 40 times faster than Bitcoin and 10 times faster than Litecoin. I'm not sure if that's fully accurate at this point. I don't know when this was written, especially since the Lightning Network came out and everything. Also, for forward thinking, over the past 7 years, Digibyte has repeatedly set itself apart with multiple blockchain firsts, such as DigiShield Guard, multi-IGO mining, SegWit implementation, AutoCrypt algorithm, Dandelion++ privacy protocol, DigiAssets, and DigiID, which DigiID goes back to when I mentioned Polygon in my previous series of what I'm going over right now in the previous video. Polygon ID, basically, it just factors into how these blockchains, obviously, blockchains are systems that are holding data. As a database bank, smart contracts execute certain programs, leading into decentralized applications, etc. So basically, like for example, our social security, in terms of that ID, basically like the blockchain is meant to house all the information on you, especially if a government's controlling it. Like especially if a government wants to use blockchain technology for total tyranny, which it can definitely be used for that. Blockchain is not only a positive, completely positive good. Blockchain can be used for like maniacal tyranny as well, if it's programmed the right way to do so, to where it's tracking you all the time with artificial intelligence and whatnot, which goes into TRIAS towards the end of this video. But if we continue to scroll down here, right here, I'm just going to go ahead and read this. So the top layer, applications or DigiAssets. The top layer is like an app store with clear real-world uses. All types of digital assets can be created with DigiAssets. With the DigiAssets protocol on top of the Digibyte blockchain, decentralized applications can be built on top of the Digibyte blockchain. Also, smart contracts that leverage the rigidity and security. The Digibyte blockchain can be coded easily. I've actually gathered from this Digibyte that it's, like I said, it came out shortly after Bitcoin did. It's basically trying to achieve what Bitcoin didn't, at least on its launch, with the fact that it's having smart contracts built with it and various other things as well. There's also, it's on here somewhere. Okay, actually, I'm just going to go and skip to this part right here. But so you can see right here, there it is. Okay, so compared to 21 million Bitcoin, 21 billion Digibyte, so a 1,001 ratio to Bitcoin have been designed to be ready for mass adoption. Digibyte block rewards, it reduces by 1% every month instead of having every 4 years. All 21 billion Digibyte will be mined by the year 2035. After 2035, the miners will rely on transaction fees alone. It is proof of work, 100% proof of work. It can be mined with 5 algorithms called SHX A256, Script, Skyne, Qubit, Nodecrypt. So again, like I said, this is basically trying to like top Bitcoin and whatnot, but the fact that it has more capabilities, kind of like a beefed up Bitcoin, which again, like I said, I would have to believe that at some point Bitcoin could be beefed up, obviously a lot more than it already has, and actually perhaps end up being that interoperability function that I mentioned about earlier. But I'm going to go ahead and stop it here for this right here for Digibyte, because I feel like I've kind of already gotten the point across. In all honesty, I probably won't go over this info paper as well. Again, I'm going to have all these linked in the description. I feel like I've already gone over a pretty good synopsis of this coin, but I'm going to go ahead and move into Chiliz. This is the only thing I'm going to go over for this one. It's a rather easy solution in terms of blockchain technology to understand. So right here are all these highlighted portions. In 2018, an idea was born, an idea that blockchain technology could be used to provide fans around the world with a new way to engage with their favorite sports teams, and the teams with a new way to monetize their global fan bases. Right here it says pioneering a generational shift in the sports industry through digital assets called fan tokens and the Socios.com fan engagement and rewards app. It is the digital currency, Chiliz is, for sports and entertainment used by fans of the world's biggest sports teams to purchase fan tokens on Socios.com and listed on the world's biggest cryptocurrency exchanges, including Coinbase and Binance. Down here, Socios.com is the biggest non-exchange blockchain-powered app in the world, providing millions of sports fans with the chance to connect with their favorite sporting organizations through fan tokens, fungible digital assets minted on the Chiliz blockchain. And again, like I mentioned, this was one of the better movers that I mentioned, 25,000%, 257x or so as well. And it's got it, like, it's just a very simple use case. Obviously, a lot of people love sports and whatnot. I think like it's just probably just definitely something that's bound to be pretty popular as time comes on to be. As it said, it's already the world's biggest sports teams and whatnot, like what I just got done talking about. But anyways, to move on here to Cadena. This is a very interesting project, I believe. Whenever I get to the white paper, I'm gonna geek out a little bit for what I noticed when I was reading it the other night to kind of prepare myself for this video, because it's a lot of information. But on here it says innovation that works. Right here it says behind the tech. Let me zoom in a little bit here. I'm assuming you probably can't even see this text because it's rather small. So right here it says behind the tech, Cadena is the industry's only scalable layer 1 proof of work blockchain. The principal feature that drives Cadena is scalability, which enables Cadena to deliver infrastructure grade performance for any blockchain project along with our own smart contract language packed. Cadena's platform provides the world the tools and environment to turn ideas and ambitions into reality. Founded by Stuart Popejoy and William Martino, who created JP Morgan's first blockchain and led the SEC's crypto committee, Cadena aims to allow for true blockchain mass adoption. Founders right here, it says Will Martino, co-founder Stuart Popejoy. Right here it says Stuart led JP Morgan's emerging blockchain group. Will Martino was recruited from his role as the tech lead for the SEC's cryptocurrency steering committee. Together, they built JP Morgan's first blockchain known as JPM Coin. Right here it says Cadena's advisory team consists of experts such as Dr. Stuart Haber, the co-inventor of blockchain and the most cited author in Satoshi Nakamoto's renowned 2008 Bitcoin white paper. So I believe that is good to see there. You can see down here former organizations of our team members. So again, like I mentioned, JP Morgan, United States, Apple, Microsoft, Disney, Twitter, Cardano, Bitcoin, etc. so on. Right here, so this is the main thing that I'm talking about and how interesting this coin is. So Chainweb, Cadena's public blockchain Chainweb is the only sharded and scalable layer 1 proof of work network in production today. It utilizes a proof of work consensus mechanism that improves throughput and scalability while maintaining the security and integrity found in Bitcoin. To achieve this breakthrough in scalability, Cadena braids together multiple Bitcoin like chains. Basically, so when you shard a system, it's basically like, for example, if you have like basically think about if a blockchain is just using one node to process all of its transactions and whatnot, it's gonna not be as fast as it could be. But if you break that chain up into a bunch of different pieces and you diversify portions of computational throughput to a bunch of different nodes or shards, for example, it increases the efficiency and whatnot of the blockchain in general. And then when you, as I said, Cadena braids it, it also just further kind of increases the efficiency in multiple different realms for the blockchain as a whole. But again, like I mentioned, as I've played Jack Mallers clips in the past where he touched on how physics is very heavily connected with blockchain technology, we're going to see this with Cadena and the braiding and the sharding. So like I've mentioned in my previous videos, blockchain technology in terms of a decentralized network, in terms of like a system of nodes. Imagine a ball of yarn and there's dots that lie along the ball of yarn, and each dot acts as a node, which is a part of the blockchain. All of these dots, these nodes, are communicating back and forth in order to keep the blockchain running efficiently, as it should be, in a healthy, equilibrious manner. And like I've said in the past, it's exactly how the universe works, and the universe is just a massive intergalactic network, kind of like a galactic blockchain, and all these galaxies are having to communicate through things such as what is commonly known today as quantum entanglement, or as Albert Einstein put it, spooky action at a distance, which was that they recently gave the Nobel Prize for them confirming that. It was a massive debate for a long time between Albert Einstein and people like oh well, I forget his name at this point. I don't know, it'll come to me at some point. But anyways, I'm going to go and read this. So parallel chain proof of work architectures have been previously proposed to reap the benefits of security, deployment flexibility rather than for scalability. A proposal in 2014 sought to decrease the odds of 51% attacks ever occurring by linking blockchains together to create a block rope, with each chain referencing the other by incorporating each other's block hashes into their headers. Another proposal sought to use a parallel chain as a live beta for Bitcoin by transferring coins from the main chain to a beta chain in some UTXO recognized way, as I went over earlier in regards to UTXO, so that it could be used for real world or for real value transactions to better exercise the beta. While parallel chain approaches were recognized as a possible scaling solution, the increased bandwidth usage was seen as a significant problem, and the increased coordination required for hard forks in multiple chains undesirable for Bitcoin. But as we get into these, so again, these chain web architectural features. So think about the chain web as basically being, like I just mentioned, the universal galactic network, and all the black holes, or i.e. the galaxies, are having to communicate properly. So our black hole or our universe doesn't collide with another. Or, my bad. Our black hole at the center of our galaxy doesn't collide with another black hole or another galaxy, things like that. But the novel architecture of Chainweb is predicted upon two separate yet related features that operate at distinct layers of the Chainweb stack: cross-chain cryptocurrency transfers via on-chain SPV smart contracts, and parallel chain binding at the hashing level via peer-chain Merkle root inclusion. The former, which occurs in the application, a smart contract layer, leverages the latter to create valid Merkle proofs of currency transfer. Merkle proofs are basically, it's like a lineage tree almost of like transaction history, or just in general the data that is being utilized with the blockchain. Whatever the blockchain is doing with respect to its specific capabilities, it's basically, again, kind of just like it said, kind of a let's see, Merkle root in terms of kind of like a tree-like system, like a lineage. You'll see how family lineages are typically drawn out and whatnot to kind of create that system of information and whatnot. But what I found insanely interesting when I got to this point right here where it says, in this section we will first detail how to enable globally mass conserving cross-chain transfers of cryptocurrency via SPV. This information is necessary to avoid per-chain floating currencies that would require dedicated exchange markets to move value between individual chains. It actually says somewhere on here, let's see, I'm gonna look it up. It specifically said something about using a oh, I guess it's right here. So yeah, a euphemism from physics used here to describe a net zero transfer system like Bitcoin, and that goes up to, because that's what this I forget what that's called, but the 17, linking it down here to this down here again, I forget what these things are called. But so mass conserving, that's basically the conservation of energy that is a part of science, and it basically universal law in terms of physics and whatnot. And like I said, blockchain technology be connected to physics and whatnot. Same thing for, obviously, as it's speaking like here, for being a net zero transfer system like Bitcoin. That's basically the law of conservation of energy and things like that. But instead, this time it's basically, I mean, it's like, I mean, it's no different from the universe, because the universe is basically just a digital dielectromagnetic simulation of information. I mean, again, like as I mentioned in the past, blockchains are basically, as I'll get to TRIAS here in a minute, which talks about like artificial intelligence and things like that. Oh my goodness, I left it on there. Well, I guess it doesn't really matter. Sorry about that. I forgot to switch over my scene, but anyways, I was reading all that out. What I was showing down here was a euphemism from physics right here, and I've just been reading this white paper again. Sorry about that. But again, like basically artificial intelligence is going to use blockchain as kind of like the database for the artificial intelligence, acting as basically kind of like the brain, again, like a database that's storing all like the memories, the information that the consciousness is having to use in order to interact with the world and things like that. So that's all I want to go about for Cadena. Again, basically you can just think about it, like I said, with that universe analogy, and how like it's sharding the system into a bunch of different shards or nodes, if you want to think about it that way, or like I said, galaxies in a universe, and all of it's having to communicate. Again, that's kind of just a general idea of a blockchain as a whole. So I'm actually not going to go over this as well. I kind of was hoping to kind of just explain a lot of this without having to read it, but again, I'll have all this linked in the description as well. Somebody actually, I was looking on this CoinMarketCap for Cadena, and somebody said on here something about the supply and how like 50% of it or 40% of it or something is only in 2 wallets. Again, like I was mentioning, they're kind of seeming to put a lot on the layer 1 aspect of things, and as information that I've had on this channel in the past, like Jack Maller's talking about it, that you can't, like, blockchain technology needs to be built in layers. You can't kind of just like shove a bunch of capabilities and functionalities into like layer 1 or whatever, because it's, I mean, like, it's just going to be too much. It needs to kind of be diversified across multiple different layers in order to kind of, you know, function more properly and whatnot. So now we're brought to TRIAS, which again I mentioned with artificial intelligence stuff. So trustworthy and reliable intelligent autonomous systems in all platform supported, server, PC, mobile, IoT, etc. Internet of Things is what IoT means. So basically, like, some point in the future when all this stuff gets adopted more, your laptop, your speakers, your phone, your car, your mouse, literally probably anything you could think, your keyboard, your microphone for your computer, could all be an IoT device that's connected to the block. Like, for example, think about like a microphone that is connected as an IoT device to a blockchain that has basically like software built into the hardware of the microphone, that it has like built-in voice changers and things like that. Or like think about what you could do with like speakers or cars or whatever. But to continue here, TRIAS, an all platform supported, native application compatible smart contract execution platform, development framework, and collaborating ecosystem. TRIAS aims to define a new generation alt-platform supported public chain system, trustworthy and reliable, intelligent, autonomous systems make people trust in machines. TRIAS aims to define a new generation all-platform supported public chain system. Again, like I said, it's trying basically to bring trust to artificial intelligence, so we don't kind of like see it carry out, you know, like all the movies are made out to be, where the artificial intelligence, like Terminator and like things like that, is finally created and it turns evil and like basically kills all of humanity and things like that. Nothing else on that one. So if we go to this for TRIAS, so TRIAS in a nutshell, TRIAS means trustworthy, and again, trustworthy and reliable, intelligent, autonomous systems, which is basically just talking about, like, for example, like, if you think about, like, a, some sort of machine in, like, an apple garden that is some sort of artificial intelligence that's going through the apple garden and it's picking the apples off the trees and things like that. Like, for example, like artificial intelligence robots replacing like like just fast food workers or any workers in general that, you know, like aren't absolutely needed, which is a bad side of all this technology in a way. But TRIAS is a full stack decentralized trusted cloud infrastructure and ecosystem for all scale, general purpose, and enterprise ready applications. The whole cloud infrastructure aspect of blockchain technology and solutions I find very interesting. So like, kind of just think about it as like a bunch of like IoT devices or artificial intelligence robots or systems, whatever it may be, connected to a cloud infrastructure in terms of blockchain technology, where it can, through smart contracts and whatnot, you know, like, you know, gather the information that it needs from, like, for example, through an Oracle network or something from the real world or whatever, you know, just again, like, kind of I'm trying to speak generally here to kind of get a general simplified point across for whatever, you know, the specific chain or whatever it's trying to accomplish with its protocol and etc. Right here for the vision, it says TRIAS aims to solve the core trust issues. With TRIAS, we can root trust into machines with a firm assurance that the machines will deterministically do what they are told to do. So basically, like, for example, let's say again, going back to that apple garden analogy with that robot, whether it literally looks like a human or if it kind of just is like a Wall-E or something on wheels, it's kind of going in between the trees and whatnot. This is kind of here to make sure it functions properly and it doesn't like go berserk and like start, I don't know, like tearing down the trees or maybe even malfunction and like kill somebody or something. Especially if we like get to the point of like Terminator and things like that. But here for this introduction on TRIAS, let's see. I'm only going to go over the Leviathan, well, the introduction here and the Leviathan aspect of this, but with the past 60 years, rapid advancement, especially with the breakthroughs in cloud computing, big data, IoTs, and IA technologies in the last 10 years, IAS will be evolving to its new form, intelligent autonomous systems. The new IAS machine will become an indispensable infrastructure for human society, especially when they are carrying our daily life. Consequently, the crisis in lacking trust to them will seriously affect our society's stability. Trusting machines will become a new fundamental need for humanity in the near future. Building the trustworthy and reliable IAS TRIAS system will be the ultimate goal of Project TRIAS. If anybody's watched Black Mirror, the episode where the robot dogs, so which are basically artificial intelligence systems directly related to what I'm talking about, which are they're being made. I mean, if you aren't aware of that, they're the exact same robot dogs that were in Black Mirror are being made by society today. And it's literally quite frightening. And even like one of the first episodes of Black Mirror where they had that like social credit system and like everybody's lives were dictated by the apps on their phone. That's basically like what the Digi ID that I was talking about earlier, and like a global social credit score system, which is kind of what China wants to do. And like where they're like tracking and surveilling everybody all the time through like blockchain technology, which, as I said earlier, can definitely very easily be used for tyranny. But right here it says Leviathan, a network of trusted execution environments to achieve correct execution of general purpose software. Again, just going back to the software related back to blockchain technology and whatnot, that is a part of the hardware of these artificial intelligence robots or whatever they may be. But here it says heterogeneous Trusted execution environments allow Leviathan to identify misbehaving nodes rapidly while eliminating the dependency on any single technology's provider, e.g. Intel. SGX-based consensus requires a strong dependency on Intel's centralized online verification service. Meanwhile, HC Graph's gossip protocol significantly reduces the redundant TEE verifications while preserving a scalable and robust web of trust. Again, this is kind of just generally talking about their certain protocols that they're using in order to, in respect to this being related to artificial intelligence and things along that line, creating in a blockchain network way scalability, and again, like I said, a web of trust, so we can trust these machines to not, go haywire, berserk, and kill everything in the world and whatnot. And it says right here, Prometh, a traceable development framework to achieve decentralized functional and security properties definitions for general purpose software. Prometh generally records the critical information for a piece of software's entire lifecycle on blockchain, including development, building, distributing, etc. So that's essentially saying, so it's creating basically like a blockchain network, a data stream of the software that's related to this artificial intelligence object, basically, I believe. So like, like for example, how there's a blockchain with Bitcoin and it has to be monitored. Any blockchain, whether it's Ethereum, Cardano, whatever, is monitored so it's, trustworthy, secure, whatnot. It's doing that same thing here, but for in regards to like software that some sort of object is using, so the software doesn't go malicious, basically, like a blockchain could go malicious. And it says this deduces the genuine properties of the software, which ensures any software to only implement intended behaviors, which again goes back to how like making sure the nodes are trustworthy for like transactions. Again, this time it's for the purposes this blockchain protocol is seeking out for artificial intelligence and like things like that. Right here we see TRIAS for the first time proposes a separation of powers based decentralization model for the cyberspace governance between the fully decentralized and fully centralized governance structures. TRIAS disintegrates the monopoly powers of the machine's manufacturer while dynamically balancing the three governance powers with mutual restrictions. It creates a new order in the decentralization governance paradigm, aiming at forwarding one step closer to the fairness and justice in the cyberspace. That sounds good all on the surface and whatnot, but again, if you're familiar with my content, I do ultimately believe that blockchain will mostly end up being used for rather malicious purposes. It can be a fantastic thing, but I just, in all honesty, don't think that that's where the world's heading right now. But TRIAS aims at enabling a much wider range of usage scenarios as it targets at bringing trust to general purpose software platforms instead of only to ledger related applications. Again, that's pretty much touching on what I've been saying, bringing trust to general purpose software platforms. So like, I don't know if it was mentioned on here somewhere, I've already read it, but like basically kind of like perhaps I'm crudely saying this, but like almost like fact checking, like the Intel processor that's in your laptop. Like think about like your processing power for like your computer being connected to blockchain in a way, in terms of like decentralization and like making sure like some sort of software on your computer, or like I've been mentioning, artificial intelligence robots or whatever it may be, whether it's a truck or whatever, some sort of IoT device, making sure your software doesn't get overridden by like a hacker or something else that's just malicious in general, which again, like I said, connects to like how we kind of typically understand it now in terms of it just being like a ledger related thing in terms of like transactions on a blockchain. But here, which I believe, so this is the last thing I'm going to read on this one. Layer 1 enhancement to public blockchains. Leviathan establishes trusted relationships among the consensus nodes of existing public chains. This pre-exists trusted relationships significantly reduces the complexity for reaching consensus. It is able to help the third-party chains to achieve more than 100,000 transactions per second for a single shard and defend near 90% malicious collaborative attacks. Consensus-oriented enterprise programming. Magna allows decentralized applications to delegates complex business logic and data collection procedures trusted native applications. It further implements the consensus logic and ledger format without confining to any predefined fixed strategies. by the chosen any underlying public blockchain. Consensus-oriented programming allows decentralized applications on TRIAS to implement much more complex general-purpose enterprise application logics. Trusted operating systems and application ecosystem. TRIAS eliminates easily malware and attacks, as Leviathan only allows the execution of whitelisted applications, and Prometheus only allows applications to implement whitelisted behaviors. Therefore, TRIAS builds trustworthy app stores for PCs, enterprise servers, mobile or IoT devices. Trustworthy multi-party computation. TRIAS achieves multi-party computations by exchanging applications instead of exchanging private data. Leviathan ensures the genuine executions of the third-party application, and Prometheus enforces the application to implement predefined data processing contracts. Trustworthy cloud computing platform. Leviathan creates a union of trusted computing algorithms, creates a union of trusted computing platforms, which can act as a global scale cloud computing platform. Prometheus implements the development framework and application distribution channel, or the App Store, for this cloud platform, and Magcard implements the SaaS logic to connect and schedule the Prometheus apps. This ubiquitous cloud platform links to small public clouds around the world who do not have enough scale to convince more customers. TRIAS provides them with trustworthiness, endorsement, and further implements across-border unified resource sharing, scheduling, and billing. So I mentioned like app stores and whatnot. I'm just going to assume at least a number of you are already aware of the fact, like, for example, things on like the Google Play Store, people can post things in terms of like applications for your like a Chromebook or something, or your phone or whatever, that are actually malicious software that you download. And like, for example, you can input information about you. Let's say you download, like, if you have like a Ledger wallet, the hardware wallet, and you download a malicious application and whatnot, and then you put in information on there, people could basically like phish your information because they're giving you malicious software. So something like this is actually trying to prevent things like that, which is, I mean, it's a good thing. Hopefully, like I've been mentioning, all this gets used for good purposes. This is the last thing I'm going to go for TRIAS. I'm touching on a lot for this one because I find it very interesting, but instead of layering consensus acceleration techniques above the consensus layer, such as the layer 1 or layer 2 improvements, Leviathan targets at the performance issues by digging one layer below the consensus layer. A layer -1 enhancement. Layer -1 focuses at constructing trust relationship among the voting nodes. Its main goal is to identify the set of nodes who possess the greatest difficulties to tell a lie, i.e. the difficulties to execute unexpected programs without being identified. One way to implement the layer -1 or the sub-layer enhancement is to enforce remote attestation techniques among the voting nodes. Remote attestation is a critical procedure implemented by the Trusted Execution Environment technologies. It genuinely reports the status of the loaded applications on a target node with the help from an embedded security chip, such as, this is why I mentioned Intel earlier, so I'm going to reread this sentence. And genuinely reports the status of the loaded applications on a target node with the help from an embedded security chip, such as the TPM Trusted Platform Module, the Intel CPU's SHX extension, or the ARM's Trust Zone extensions. And what I said earlier about that, I wasn't trying to say that's exactly what this is, but I was just kind of mentioning it in my own way. But with remote attestations, any voting node will examine whether its connecting peer is running only the correctly installed and configured software stack. Therefore, as long as any node has the intention to tell a lie, it will be identified immediately because the changed applications or configurations will be spotted by remote applications. With the layer -1 or the sub-layer enhancement, a voting node will ensure that it's communicating with a correct peer. However, actually no, I'm not going to read that, but with this matrix defined, Leviathan only need to choose a small number of nodes with the highest values as a voting node to enforce a consensus procedure on a target transaction. This procedure significantly increases the consensus efficiency. Again, they mentioned the word matrix. Is the first time the word matrix was mentioned in this video. Again, there's a reason why the movie Matrix came out, because blockchain is essentially the Matrix. I mean, that's pretty much what the metaverse is. And the fact, like I mentioned XYO previously in this video, XYO is a real world Oracle blockchain protocol, which is trying to and is mapping real world data in terms of like location services and whatnot into the blockchain, so the metaverse can actually like virtually in a proper way simulate the real world. So like if you have like an Oculus or something like that, an HTC Vive, you can travel to, you know, on the opposite side of where you currently are on the globe through the metaverse. And eventually at some point, assuming humanity gets far enough along in its progression, I'd assume that you could, like, it would be taken to the point of, like, you could, like, Neuralink, for example, I would assume would probably have these capabilities. I don't recommend getting anything like that implanted in your body, but you do you. For example, to, like, you know, you could virtually simulate in your consciousness traveling somewhere, and you could smell things, you could even touch things in the metaverse, which is, like, kind of creepy almost, in all honesty. But further here for TRIAS, Leviathan can further implement a trustworthy node selection mechanism to support the upper layer service, such as the consensus layer services of third-party public blockchains, in which case the public chains run as a decentralized application on Leviathan's layer or sub-layer network. So here for the HC graph. The basic idea of the HC graph is to enforce mutual attestations and gossip protocols among nodes so that they collaboratively construct a web of trust, i.e. the Leviathan network. Again, you'll kind of just see a network down here, kind of like a web of, for lack of a, not necessarily, well, forget what I was about to say, but you can just, I'm not saying this is what the website's saying this is, but you can just think about each of these dots as, like I mentioned earlier, like on like a ball of yarn, with like nodes being on a ball of yarn, they can communicating in a blockchain. It's having to build up a web of trust through the protocols of this specific blockchain that I've been talking about. It make sure these nodes, or whatever they call them, are trustworthy and things like that. But that was about all that I wanted to touch on here for TRIAS. Again, it's a pretty interesting coin. Again, I'll have all this linked below if you want to check out more of it yourself. So the last thing that I'm going to be going over in this video is going to be ANKR. This one isn't crazy like some of the other ones I've gone over in terms of like it being rather complex and like actually being parts of blockchain technology in terms of adoption that we haven't really seen yet. This in general just has to do, as it says up here, with Web3 infrastructure in terms of bringing in like DeFi. And like I said, obviously Web3 is just the third evolution of the internet, with you having like Web 1 being like static URLs, and then Web 2 brought in more dynamic things and functions of the internet, like when YouTube first got introduced and like things like that. And Web 3's also has to do with, obviously you can see down here, 1inch, Polygon, as I mentioned in the previous episode of this, SushiSwap, Avalanche, just the whole aspect of DEXs, you know, like swapping your money and whatnot, getting rid of like banks as an actual like physical middleman. Now you're kind of just using these smart contracts, as I mentioned in this video, to facilitate your whatever you're trying to do, whether it be, you know, you're trying to pay somebody for some sort of good, or you're trying to, as a hospital, send somebody's medical records to another hospital, or somebody who's trying to access it. But right here it says building a multi-chain future, working together, and Web3 is a win-win for everyone. That's why we're building a more collaborative and powerful multi-chain ecosystem. ANKR is chain neutral, providing tools to develop and earn on all chains. Again, that's the chain agnostic thing. Interoperable, connecting and bridging as many ecosystems as possible. And decentralized, applying the most important factor of Web3 to all solutions. But here, let's go ahead and just go to the white paper right here. So we're actually going to go to, let's see, I actually didn't really check on this one before I went over it, because it was just mainly Web3. But I'm just going to read their story here. I'm going to read their focus, and I'm going to read the overview, and then I'm probably just going to call it quits here for ANKR, because like I said, it's just Web3. I feel like most people kind of already have their minds at least generally grasped around and wrapped around. But ANKR was founded in 2017 with the idea of harnessing the cloud computing power left idle in data centers all over the world and reallocating it to power Bitcoin mining, node hosting, the Internet of Things, which is IoT, and more. The team grew quickly and accumulated a global supply of bare metal servers, which enable ANKR to provide services like node hosting and application programming interface access. During the past 2 years, ANKR shifted focus to providing the underlying node infrastructure for a movement that would become known as Web3. As proof-of-stake blockchains began to offer exciting new possibilities for smart contracts built on blockchain rails in the form of decentralized applications, ANKR stepped in to serve the vast needs for increased node infrastructure necessary to develop and operate decentralized applications. ANKR combined developer infrastructure, full nodes, with staking infrastructure, validator nodes, as the development on these various blockchains went hand in hand with proof-of-stake security and incentives. As ANKR began to focus on proof-of-stake infrastructure, our services increased 25-fold over the last years as we powered a growing portion of Web3, and we saw incredible expansion in a number of areas. With, I don't know why they put a colon right there, I don't know where that, anyways. In response to this growth, ANKR became one of the top 20 most traded tokens on Coinbase, and ANKR became known as a critical infrastructure provider for the Web3 stack and proof-of-stake networks. However, as ANKR evolved alongside the Web3 industry, the importance of decentralization, especially in the infrastructure layer, has become increasingly clear. A dependence on centralized infrastructure creates single points of failure, unexpected downtimes, and an increased threat of censorship, which are antithetical to the core principles behind decentralization. As the fastest growing infrastructure provider in Web3, ANKR is now laser focused on decentralization. This means doing our part to transition more blockchains and decentralized applications built on them to more distributed and resilient node networks supported by independent node providers. Additionally, this means formalizing the system of community governments over ANKR network and upgrading the protocol to ensure the ANKR token is the heart of the entire ecosystem and brand new utility. The focus here is the importance of node infrastructure cannot be overstated. Everything that's a part of Web3 relies on nodes, including Layer 1 blockchains, DeFi protocols, virtual worlds, decentralized games, and NFT projects. Therefore, the growth of demand for reliable, secure, and efficient node infrastructure should continue to increase alongside Web3 development as a whole. With this in mind, ANKR has a clear calling: provide the node infrastructure necessary to make Web3 development easy and prolific. ANKR provides the multi-chain tools and node infrastructure that developers need to build projects on Web3. And we're accomplishing this in a way that is true to the Web3 movement, with the end goal of completely decentralizing infrastructure and governance. Providing services for these movements places ANKR as a central utility player, providing the critical infrastructure for the growth of Web3 as a whole. If we think of DeFi, the metaverse, decentralized gaming, and other Web3 industries as burgeoning new cities, then ANKR is like an underlying power grid that makes all the operations possible. And when these movements expand, ANKR will too. That right there was a very good, I'm going to read it again. If we think of DeFi, the metaverse, decentralized gaming, and other Web3 industries as burgeoning new cities, then ANKR is like an underlying power grid that makes all the operations possible. And when these movements expand, so will ANKR. So here's the last thing I'm going to read for this video. ANKR Network is the gateway through which Web3 developers, projects, and protocols connect to the node infrastructure and development tools they need to build the Web3 applications. In the months ahead, we plan to improve the decentralization of the ANKR Network node marketplace, expand the scope and variety of services offered through the protocol, remove central points of failure, and promote consensus-based decision-making with the launch of ANKR DAO, or Decentralized Autonomous Organizations. We believe these changes will radically transform the ANKR ecosystem, significantly improve the utility of ANKR token, and provide tremendous value to the ANKR community. But as I mentioned, that was the last thing that I was going to read here for the overall information breakdown for the altcoins that I went over in this video. Hopefully you guys enjoyed the content. Hopefully you stuck throughout this video, which is almost 2 hours long. Ended up making it a little bit shorter than I mentioned on my community tab, which is a good thing, I suppose. But just as a quick touch on analysis again for Bitcoin, I likely think we'll probably see a main decision made in the coming week or two or so. Either we'll get that bear trap, major bear trap that I talked about. Maybe we'll just get a healthy correction to the downside. Or, hopefully best case scenario, we see Bitcoin pump towards 25,000 and continue higher from there. But once more, that was all that I wanted to go over in this video. Hopefully you guys enjoyed, took something away, and I hope all of you have a blessed day.
Ooh, I'm regretting now, won't I see you forever, such a long